Hi everyone. So today we continue our discussion on the value of taxable supply of goods and services or both. We already have seen in the earlier sessions what exactly is, how exactly do we need to determine the value of goods or services, taxable supply of goods or services or both. And finally we ended up saying that wherever or whenever the transaction value concept will not become applicable for the reason of the consideration not being wholly in money, and also when the parties to the transactions are related to each other, we have understood that valuation rules will become applicable. So a word or two about when do the valuation rules become applicable for valuation of the taxable supply of goods or services or both. So again I repeat, under what circumstances the valuation rules will become applicable? That's a question now. Now for determination of value, when value is not ascertainable according to section 15, which talks of transaction value, there are two conditions under which the valuation rules will become applicable. The first such condition is the consideration whether paid or payable is not in money wholly or partly. So what is the first circumstance when valuation rules will become applicable? When the so-called consideration is not wholly in money. If it is partly paid in money, partly in other form, then also valuation rules will become applicable. Or if it has not been paid in money at all and the consideration has flown in some other form, also the valuation rules will become applicable. So the first condition is whenever the consideration whether paid or payable, see, it need not, you focus on the word paid or payable. Even if the amount is payable partly in cash and partly in some other form also, the valuation rules will still become applicable. So whenever the consideration is paid or payable, is not in money wholly or partly. If it means if the entire consideration for the transaction has not been paid in money, which indirectly means that some other consideration in some other form has flown to the supplier of goods from the recipient of goods. So in such case the valuation rules will become applicable and we will not be resorting to the transaction value of goods or services. Okay. Then the second circumstance or the condition which if fulfilled when the valuation rules will become applicable is when the parties to the transaction are related parties. This we have already seen in the previous session. We already have seen what related persons means. The Act has very well defined the scope of what related person means, under what different circumstances we call the parties to have been related to each other, or the transactions are happening between related parties. Under what different circumstances, there are about 8 circumstances which we already have seen in the previous session. Now, in all such cases, when the parties to the transactions are related to each other, we should not be going for the normal valuation as the transaction value, but must resort to valuation rules. So now the next question is what these valuation rules are all about. So we take up the first one, and before we move on to understand the various rules of valuation, say from 27 to 32, these are the rules which talk of the valuation rules under GST. Now we need to understand few more very important terms or concepts which are used, which are very helpful for us in understanding the valuation rules. And the first term that we need to understand before we move on to the subject of valuation rules proper, the first one is that we need to understand what open market value is. In the valuation rules, we talk of open market value. Most of the time we talk of open market value. So what exactly is open market value is what we need to understand. Okay. So at an appropriate time, we will take the meaning of open market value in little greater depth. Now we understand what section or rule 27, what rule 27 of valuation rule says. That's what we are going to understand now. We are talking of rule 27 of CGST and SGST rules 2017. These rules have been issued along with the Act which came into force on 1st of July 2017. Immediately then the rules were given. These rules are called CGST and SGST rules 2017. Okay. So when the supply of goods or services is for a consideration not wholly in money or partly in money and partly by some other means, the value of the value of such supply shall be calculated in the manner prescribed under Rule 27. So Rule 27 becomes applicable whenever the consideration for the transaction has not been paid wholly or wholly in money, or it has been partly paid in money and partly by some other means. So whenever you feel that the consideration is not paid completely in money and a part of the consideration has been met by some other means, okay, when it is partly paid. In other words, when the consideration is partly paid in money, rules 27 of the valuation rules will become applicable. And what the rule says is what we're going to see now further. Okay, when the supply of goods or services is for consideration not wholly in money, the value of supply will be determined as follows. So there's a particular order prescribed by rule 27, and the valuation need to be done according to that particular order. The first one is, when that is the case, when the consideration is partly met in money, we always need to resort to, as point number 1 says, the open market value of such supply. So what is the value I need to consider when the situation is a part payment in cash or part payment of money towards consideration? I always need to resort to the open market value of such supply. So the first condition is that I should resort to the open market value of such supply, because understand the logic behind this rule again. See, what is happening is, whenever a part of the consideration is paid in cash or in money, and the balance is met by some other means, it clearly shows that the actual value of the transaction has not been disclosed by the parties. So when the actual disclosure does not happen, we are bound to suspect there is some suppression of value which is happening there. So what should we do in the event of a suppression of value? How do we try to understand the actual value of the supply made? It's always by means of resorting to the open market value of such goods or services. So out of abundant common sense, it is quite acceptable to all of us that whenever there is a suppression of value, or whenever the consideration is not disclosed completely in cash, we will resort to the open market value of such supply. So rule 27 says, whenever an occasion demands like this, we should resort to the open market value of such supply. Okay. Now, if the open market, let's say the open market value is not ascertainable, we are not able to ascertain the open market value, or it is not available for one reason or the other, then in such a case, the consideration could as well be a sum total of the money paid, the money is paid towards the transaction, and the balance and the monetary value of the balance, in whatever manner it may have been met, the monetary value of the balance, if it is known at the time of supply, a sum total of these two will become the total consideration for, or the total value for the supply of goods or services. It means, to make it more clear, let's say the first is open market value, and if it is not ascertainable, then what is the second point? The second point says the amount of consideration paid in money terms, number 1, and in case the monetary value of the consideration flowing other than in cash is known at the time of transaction. So we also take that particular monetary value and the money already paid, club them together, and arrive at the value of goods or services, taxable value of goods or services. Okay, so I repeat, the first is open market value, the second is monetary value, what is paid in cash, plus the monetary value of the consideration which may have flown otherwise than in money. So you club these two, and that becomes your valuation. Now, in case both these are not possible, then the third thing, what we need to do also is explained in the rules. If the value of supply is not determinable under clause A and B, what clause A and B are now? We know clause A talks of, please resort to open market value of the transaction. If open market value is not ascertainable, again I repeat, the money, what has been paid, or the consideration which is met in money, plus the amount, the monetary value of the consideration which may have gone in by some other means other than money, the sum total of these two will become your value of transaction for the purpose of taxation. Okay, if these two are not possible, if the first and second clause A and B are not possible, then we need to resort to clause 3, which says, if the value of supply is not determinable under clause A and B, the value of supply of goods or services are both of like kind and quality. This is extremely important. Now, let's assume I am unable to ascertain the open market value. Let's also assume that the amount which has been paid in monetary terms is available with me, but however, the total value which appear to be suppressed, in what form it has been made good also is not known to us, so that the balance of consideration is not, the monetary value of the balance of consideration is not known to me, so that I am able to arrive at the correct valuation of the transaction. So in such a case, what we should be doing is, we should resort to the value of supply of goods or services, or both, of like kind and quality. What does it mean? Now, suppose just to illustrate it by means of an example to make your understanding better, I say, let's say Mr. X has sold fridge to someone. Let's say Mr. X has sold fridge to someone. Now, the consideration which has flown towards the fridge in money is, let's say, around 6,000 rupees. While by means of a normal understanding of the market conditions, the value for such fridge is nothing less than 11,000 rupees. Now, what is the transaction value disclosed here? What is the amount paid in money? It's about 6,000 rupees. And anybody out of common sense looking at the item, or probably by verifying it here and there, would easily, in other marketplaces, would easily be able to identify that the fridge in question will not cost anything less than 11,000 rupees. So, what is the question here? A sum total of 6,000 has been paid in money, which is available on record for the transaction of fridge supply. But however, the balance of 5,000, because we know that it is costing 11,000 rupees in the market. So the balance of 5,000 in some or the other manner the supplier must have received. Otherwise, no businessman would be a fool to supply material at a 50% discount, isn't it? So what do we understand by this is that definitely there must be some consideration flowing to the supplier of the fridge in some other manner. So in case we are able to ascertain in what form has he received that, is it that some amount, or is it that some item has been supplied by the recipient to him, which has been adjusted against the supply. If that is the case, then the value of the item which has been supplied by the recipient to the supplier of fridge can also be added as point number 2. Then the total value can be ascertained. But however, if that is also not possible, then what can we do? We straight away check. Okay, we resort to point number 3, which says that in case the value is not determinable as per clause A and B, then the value of supply of goods or services of both of like kind and quality can be applied as valuation. So that valuation can be taken as a final valuation for the purpose of this transaction also. So what the terms say, both goods or services or both of like kind and quality. The words of like kind and quality is extremely important here. So it means, now the example in question is a fridge. Now a fridge of a certain size and dimension has been sold to the buyer. Now, what a fridge of this size is normally sold in the market in other places, we need to understand. There are very many varieties of fridge which there are a lot of brands in which fridges are sold. Now, for the size that we are talking about, what the fridge normally cost, a similar item, an item or a goods of similar kind and quality need to be checked from outside, and whatever is the right value of that particular product will become our value for the purpose of this transaction also. So rule 27 visualizes 3 important points. Point number 1, this applies basically whenever consideration is not wholly met in monetary terms. It means when partly the consideration is paid in money and the part of the consideration is flowing to the supplier of goods in some other manner. The first thing is that I should resort to the open market value of goods or services or both. Open market value. In case the open market value is not ascertainable, then what would be point number 2? The consideration which has been paid in cash, and also the monetary value of the way in which the balance of consideration has flown to the supplier. These two have to be clubbed and you arrive at the value. In case both are not possible, then I should be taking the value of the value of goods or services of the like kind and quality. So it means there has to be a perfect resemblance, or as near to perfect a resemblance as possible, of the goods and services which are liable for taxation in question. And in our example, if it is a fridge, the fridge of the same size and quality, almost of the same features, have to be taken for the purpose of determining the value. So this is what rule 27 clause C says. Okay, rule clause C. Now, there is another last clause also to 27. Let's look at what it is. If the value is not ascertainable under A, B and C, now there is also a possibility that we may not be able to ascertain the value at all, either out of all these different 3 circumstances that we have seen. In such a case, what need to be done is what clause D is trying to tell us. So in case the value is not determinable under clause A, B or C, then the sum total of consideration in money and such further amount of money that is equivalent to consideration not in money, as determined by rule 30 or 31 of CGST and SGST rules 2017 in that order. So it means clearly in all the previous 3 cases, if you are not able to ascertain the value, then please be rest assured that the rules as contained in rule 30 or 31 of CGST and SGST rules become applicable in a certain order as is prescribed in these rules. Is it clear? So let's look at what 30 and 31 say a little later. So now we are talking about rule 27 of valuation rules. Rule 27 makes it very clear makes it very clear that in case the consideration is not wholly met in money, if the consideration is not wholly met in money, please in the first case resort to open market value. If open market value is not available, then the sum total of consideration in money and also the monetary value of the consideration which has flown in any form to the supplier, the sum total of these two will become the value. Okay, if this is also not possible, point number 3 again to repeat, then please check the value of goods or services of like kind and quality, of the like kind and quality. Please understand, it may be pretty difficult in the market sometimes to ascertain the like kind and quality of material. So what exactly this means is little explained further. So when we look at when we understand open market value a little while later, soon after that we also will try to see how to determine or how to understand the goods or services or both of like kind and quality. What exactly does this mean? What are the criteria under which we will be able to meet with this particular rule? Let's see later. Now, having said this, we will move on to understand what open market value is. Just now we have seen Rule 27 wants us to resort to open market value. And what is the first condition? We are Rule 27 talks of the first. See, we have seen two conditions. We have seen two conditions during which the valuation rules will become applicable. One is the consideration not being met wholly in money, and 27 precisely talks of that. 27 talks of when the consideration is not wholly paid in money. All right. The second condition is of when the persons are related or the related persons transaction is not covered here. So it very clearly says the supply of goods or services where the consideration is not wholly in money. So there are 4 steps given. First step, open market value. Next step, a clubbing of consideration both in money and otherwise. And third, if first and second are not possible, then straight away go for the goods or service or both of like kind and quality. And finally, if that also doesn't happen, then you will have to invariably go and resort to fall back upon Rule 30 and 31. According to what is stated in Rule 30 and 31, you will have to go for the valuation of goods or services for both. In that order, the word in that order has been used only to tell you that whatever order has been prescribed by the rules as to what particular method should be adopted first and what next, in the same order we need to apply. We cannot while the first one is possible, I cannot resort to second. While the second one is not possible, I cannot resort to the third. So in the order in which they have mentioned in the rules, in the same order we need to apply and check whether valuation determination is possible or not. In case it's not possible, then strictly according to the order which are given in the rules, we need. So that's why always the sentence ends with in that order. The sentence ends with the words in that order. In that order means the order preferred by the rule must be maintained. If you have resorted to 3, then it is your responsibility to prove that the first and second scenario explained in the rules were not possible for the ascertainment of value. That's the reason you have resorted to third. If at all the first is possible, then third will not be acceptable at all. Then the department might take an objection that you need to compulsorily go for the valuation as per the first rule only. I mean the first clause of the rule only. So whatever order has been prescribed by the rules must be strictly maintained, and only when the first condition is not possible, please go for the second one. Only when the second option also is not possible, please go for the third. And that's why, again I repeat, the rule ends with the words in that order. So the order given in the rule has to be maintained. Is that clear? Now, so we quickly now go ahead and look at what open market value means, because this is the first option given by Rule 27 to us. Right? So when they say you please go for open market value, and according to open market value you finalize the valuation and please discharge tax liability on that. If that is the case, then I also need to know what is open market value. The rule says open market value, fine, but is there a way in which I can also determine open market value, or are there any guidelines, or is it defined under the rules as to what open market value means? So these things we are going to see now. So what open market value means is the open market value of supply of goods or service or both means full value of money, excluding the integrated tax, central tax, state tax, unitary tax, and the tax payable by a person in a transaction. It means it is a full value of money. Open market value is the full value of money, but however does not include taxes, but does not include the central taxes or the integrated taxes, all the different kinds of GST that you have seen. It does not include, the question does not arise, but still SGST, CGST, UTGST, okay, and any other central tax or any other kind of tax, whatever may have been levied, either by the state or the center, will not be included for the purpose of value. So it means there is again no tax on tax. That part is very clear. Okay. Payable by a person in a transaction where the supplier and the recipient are not related and price is the sole consideration. See, ultimately you are again falling back upon the same old story what we have seen. So what does it say? How to ascertain the open market value? Open market value of supply of goods or services or both means full value of money, full value excluding taxes. This is what we have seen in the earlier sessions also when we defined what transaction value is. Again, what he is saying, the transaction where the supplier or the recipient or supplier not related, the price is a sole consideration. So it means even these two twin conditions have to be maintained by us at the time of determining the open market value also. So when do I say yes, I have determined the right value, right open market, I have got the right open market value now? When can I say this? I can only and only say if there are three conditions again fulfilled. One is it should not include any of the taxes either by the state or the central government. Number one. Number two, it must not also be between the persons who are related to each other, and price should be the sole consideration. So again we are repeating the same thing now. So please keep it in mind that when you resort to open market value as a choice for determining the value of goods or services or both, you must again keep in mind these things. You can fairly say that I have rightly identified the open market value only. I repeat, please listen to me very carefully. I am saying I can fairly say that I have determined the right open market value under Rule 27 as it is applicable only and only when it does not include any of the state or central taxes but include the full value of consideration, and it is not between related persons, and it is or price is the sole consideration. So you should be looking at such transaction where the open market value can be ascertained. You should look at fall back upon such a transaction and then look at what value has been considered for the purpose of taxation in that event, and probably apply that open market value for the present transaction. So even in respect of an open market value, these three conditions need to be maintained. Okay. And there is another very important condition which also have to be kept in mind to confirm that the open market value is the right value that you have ascertained, and that talks of the timeline of supply. Suppose in the month of June, first week, let's say, maybe a couple of days here and there, but precisely as much as possible on the same day also would be more welcome. So what happens? Suppose on 6th of July 2019, a transaction has happened. 6th of July 2019, just for example, to convince you about the timeline as part of determining the open market value. So on 6th of July, if transaction has happened, and this transaction was some golmaal has happened in the transaction, the value has not been declared properly. You have realized, okay, that the consideration looked to be very less compared to open market value. Now, if at all you have to find out the open market value of this particular event, where suppression of value appears to be there, okay, or where you say that the consideration has not been paid wholly in money, okay, in such a situation, it is equally important for you to first check whether you can take similar transactions, or you can take similar transactions having similar goods at the same time. For example, of the 6th of July, if this transaction has happened, then you must be able to find out another transaction which has happened on the 6th of July itself. Probably a couple of days before or after should not really matter, at least in my opinion. But however, the rule says that at the same time when the supply being valued is made. So it means the transaction in question has happened at a certain point of time, which has been put to question now. Precisely at the same point of time, if there are other transactions of similar nature, then you have to be taking the open market value of such transactions. So the timeline also is extremely important to determine the open market value. If I have done a transaction in July, and if you are trying to get me a value for transactions which you have done 4 months earlier, or probably 2 months later, then that doesn't make any sense at all, because the whole comparison fails because the timelines are not met. Because 4 months before the transaction has happened, the market conditions may have been entirely different, the price scenario may have been different, because there are so many economic factors which influence the price. All right. So what is also important for us to confirm that I have determined the right open market value is that I should be looking at the value precisely at the same time the value in question is being ascertained. Okay. For example, again go back to the fridge example that we took. The fridge is supplied at 6,000, whereas you know the regular market value of the fridge is 11,000 rupees. Now let's say take the same example again. Let's say we have sold this fridge on 6th of July. Now probably 6th of July or in the first week of July, whatever supply of fridges have happened of the similar size and quality, that need to be seen, and then you can pick up that value because the timeline also is at the same time, precisely a day early or later, or on the 6th of July itself. If there are 10 fridges which have moved out, you always have a chance to check from other suppliers also who have been dealing with the same brand perhaps, to go and check at what price the fridge has been sold. And within the same entity also, if this is since they are regular suppliers, you also could look at the supplies to other persons also. So please understand, when I talk of open market value as the first resort, at the first option for determining full value, when the amount of consideration has not been wholly paid in money, there are few conditions that need to be fulfilled, and we already have seen what they are. One is price should be the sole consideration. Okay, price should be the sole consideration, and it should not include any taxes, and the parties should not be related to each other. Now please understand again the logic behind this also. Now what is the whole idea? The whole idea of trying to ascertain the valuation is, we suspect that the value which has been determined or which has been quoted is wrong. It is quite less than what it should be. Only in such case, because the actual consideration has not fully flown in money. It means the full amount has not been received in money. All right. So in such a scenario, we already, the very fact that we are resorting to valuation rules is only because there appear to be some separation in value. The actual value is not declared. Now in such a case also, even when you go to determine the open market value, even when you are required to determine the open let us say you resort to the open market value option of trying to determine the value. Again, if the transactions are between related persons, does that make any sense? You already know. You already know what related persons are. In the previous session, we have discussed at length on that. Now, if the transactions are again between related persons, do you think you will have a confirmation that the amount they declared or the value declared is appear to be a full consideration? Definitely, again, there could be a suspicion of separation of valuation. So the parties to the transaction should not be related. Okay, and price should be the sole consideration. Again the same logic. If the price is not the sole consideration, if something has been paid in money, and there are a lot of other facilities which the supplier has enjoyed, probably let's take another instance. Now a supplier, the buyer is a transport operator. Let us say you take another instance. Now the supplier is a electronics goods supplier where he has supplied a fridge, and the buyer or the recipient is a transport operator. Now let's say the transport operator had some time ago, maybe in 3 or 4 months ago, when this gentleman, the supplier, wanted to go for a tour with family, perhaps has booked 10 or 15 tickets for him, or he has made the entire travel arrangement and he has paid for that. And let's also assume that he might have paid 5,000-6,000 rupees in booking the flight tickets etc. or the bus tickets etc. for the supplier. Now what is happening now? The recipient of goods has already made some arrangement for the supplier, which is getting adjusted now against the fridge price. Now out of 11,000, what the supplier is doing is probably assuming that this will escape the notice of the department and probably it may not be noticed by anybody at all. What he does now, out of 11,000 fridge price, he tells the buyer that you already have done so much of a facility for me for which I owe you money, let's say around 6,000 or so. Now what I'll do, I'll give an adjustment. I'll give you a discount on the fridge value now, and make good the services that I have taken from you in the earlier course. So what will happen now? The services taken by the supplier earlier by the recipient is now getting adjusted against the price. And why the bill is made at a lesser rate? Because the supplier feels by mistake, by error, the supplier feels that it wouldn't get noticed. Probably at a later point of time, at the time of audit, when everything is brought on record, or when the audit happens, probably it will come to light and we realize that there are few fridges for which the actual value has not been charged at all. So when that is the case, what happens now? The amount of value of fridge which should have been 11,000 has been charged only 5,000 or 6,000, and the balance is adjusted against the services received by the supplier from the recipient now. So there could be very many such situations which you also can visualize where a separation of value can happen. So please understand, in all these things, Rule 27 of CGST SGST Rule 2017 will become applicable, and the conditions as well just need to be met. Alright. So open market value is the first term that you need to know. Now what are the important points this open market value concept includes also has been narrated in detail. So we'll just look at them one by one in point and close the session now. I'm covering only rule 27 today. Okay. So the value should be exclusive of IGST, CGST, UDGST and GST compensation cess, but all other taxes if applicable. So that has already been seen. I have explained this to you. Price should be the full value of money to unrelated buyer. The price should be sole consideration. This also we already have seen now. Okay. Supply should be at the same time when supply being valued is made. So it means the timeline also we have seen. As I said 6th of July, then probably you should be looking at parallel transactions on the 6th of July itself. Probably a day or two here and there should not matter so long as the right valuations are met. Such supply means supply of like, kind and quality. Now it is extremely important for us to understand the supply. Okay, the supply of like, kind and quality. Supply of like, kind and quality. Probably in the same industry within the industry for certain items it may be easy for us to ascertain this kind of thing, but in principle please understand it's a very difficult task. It is a very difficult task to reach for goods of like, kind and quality. It's very tough, because otherwise what happens from company to company, brand to brand, from sizes to sizes, particularly when you talk of consumer electronics, a lot of features keep changing. So if there are 2 additional features, the price could be more. If the features are less, the price could be less. Or even sometimes depending on the circumstance which the supplier himself is facing, because of the stocks have been with him for the last 1.5 years, there is a huge amount of dead stock lying. He's facing cash crunch and is unable to run his business well because of cash flows. Probably he might offer even at a loss discount and then try to supply the best goods at a least price. So all these circumstances quite happen in business. So it's very tough for us to reach the goods of like, kind and quality. But please understand, when the open market value is not possible, finally what you need to resort to is the goods of like, kind and quality only. So when goods can be said to be of like, kind and quality also is something we need to understand. When do we say they are of the like, kind and quality? We can say if they are 100% similar or as near to the goods in question which is being valued in terms of features, in terms of facility, okay, in terms of the utility, in terms of size, in terms of shape, everything. Say for example, we have taken an example of a fridge now. Now if a fridge, now when you compare, now finally if by any means the supplier is not cooperating and we are not able to get any information about how to arrive at the value, this normally happens when the arrogance of supplier, when the information is not forthcoming, right? In such a case what you will do, then you will have to resort to the fridge of like, kind and quality. Now if I say fridge of like, kind and quality, now if the fridge in question is a higher fridge, higher brand, then it's very difficult to get another fridge of a same kind and quality. But in such a case what happens, if it is not exactly similar, then probably you always can try to get something which is almost similar to what is the item in question. So whenever the first 3 options are not available to us, we always will have to resort to the value of the goods of like, kind and quality. Okay, the goods of like, kind and quality. So what you should do, try to get a similar item and check at what rate it has been valued, or try to get an item which is as near to the item in question as possible, then try to. But if they're totally different, then probably the whole valuation rule will not have been applied properly. So please ensure that goods of like, kind and quality means there has to be at least 95 to 97% of similarity between what is the goods in question and the goods of like, kind and quality which you may have chosen to compare. Is that clear? Okay. Now price should be of supply of similar in all respects. Now again they have further explained as to what exactly goods of like, kind and quality mean. This you can read all by yourself, and probably any doubts we can always discuss. But please keep in mind that as a last resort you can go for goods of like, kind and quality, and the value of that goods of like, kind and quality will become our value for the purpose of application of rule 27. And please understand, rule 27 talks of the options of valuation when the consideration is not met wholly in money. It means it's partly in money and obviously partly by some other means which we have discussed at length just now. So this is all about rule 27, and the further rules we'll just take up in subsequent sessions. Okay.